Hey guys, in SA 530, there is a term called replacement item. Ever heard of it? I'm not sure if many of you have heard of it. For those of you who have not heard of it, here is the breakdown. So SA 530 states that audit procedure should be applied on replacement item in case the same cannot be applied on the selected item. Let's take an example from the bare text of the standard itself to understand this. For example, let's say you're testing the bank payments made by an entity. What would you see? You would see the bank statement reference to see whether the amount has been debited in the entity's account to trace the same. However, let's say the sample you selected turns out to be a cancel check. So in this case, what would have happened is the transaction would not have financial impact because the entry that you would have passed is initially vendor account debit to bank. Then while reversing the payment, since it's a cancel check, you would have reversed the same entry, that is bank account debit to vendor, thereby nullifying the financial impact in the books of accounts of the entity. So in this case, you will see whether the cancel check has been appropriately approved and all the delegation of authority has been appropriately taken care of, and then proceed to take another sample to replace the same, which is called as replacement item. I hope you guys understood this. For more insightful logical sorts like this, do subscribe, click the like button and share the same. Thank you. Keep learning, keep growing. Cheers.